Fox Business Alert Chicago Fed head Austin Goolsbee pivoting from interest rate hawk to dove after the latest consumer price index report, that's inflation at the consumer level, showed inflation rose at a 2.7% annualized rate last month versus a prior pace of 3%. At the Fed's last policy meeting, Goolsbee voted against cutting interest rates, but yesterday he sang a different tune on the Claman Countdown. Listen.
There's a lot to like, and if we keep getting reports like this, I realize it's just 1 month and you never want to hinge too much on a single month, but that was a good month. I believe rates can go down a fair bit from where they are now, as long as we know we're on path back to 2% and that what we've seen, these blip ups in inflation, are not stall outs. They're not going the wrong way. They're going to truly prove to be transitory.
But today, New York Fed President John Williams said some technical factors may have distorted November's CPI reading, and he sees no pressing need for a rate cut. What does President Trump's economic whisperer think? Let's bring him in. He's White House National Economic Council Director Kevin Hassett. Kevin, before we get to economists' multiple opinions, I need to ask you about the news breaking in the last hour from the White House that the administration has struck deals with 9 pharmaceutical companies to reduce drug prices here in the U.S. How will this bend healthcare's cost curve?
Oh, it's absolutely huge. And the fact is that you might recall, I remember talking about it on your show back in the first term, that President Trump came in and he went after the drug companies big time. And for the first 2 years since World War II, the consumer price index for drugs went down. So there was deflation for drug prices, and that's what we're seeing now. And so he's driving hard bargains. He's pressuring the FDA to bring in more generics and biosimilars, and drug prices are going to come down. But don't forget that drug prices are a small part of the story, that we got to get healthcare costs down, and we're working hard to do that as well.
Yeah, well, he also brought in the insurers as an important piece of this entire moving merry-go-round, and we can look at some of the intraday pictures of the stocks involved here. These are health insurers, and there was a bit of a spook there for a moment when he said it, because he said insurers have to make less money. Now, that sounds a lot like the old Democratic voices who would say they would take on the insurers and everybody would get upset and say, well, no, what about the free market? President Trump is leaning in that area very hard, it appears.
Well, I think that there's a difference. And the bottom line is that under the Affordable Care Act, which was really misnamed, then what happened was that we set up these Obamacare insurance policies that were heavily subsidized by the government, and the insurance companies basically just took whatever the subsidy was and jacked up the price by that amount. And as the subsidies went up, the prices went up. And it was sort of like what we saw happen to tuitions when we gave lots of student aid. And so President Trump is not going to be playing that. He's not going to let them play that game anymore. But he understands that insurance companies play an important role in the economy, and they need to provide insurance to folks, and private insurers especially have been doing a better job at driving down costs than what we're seeing on the Affordable Care Act people. And so I think that there's a lot of room that can be made up. The drug price news today is fantastic, though.
Let's get to pricing in the aggregate, in the overall at 30,000 feet, inflation. So John Williams, the head of the New York Federal Reserve Bank, today questioned the quality of the CPI data, which actually looked cooler, which means better, and flat out said he does not see a need to ease rates. He sees a downward bias in the number. Do you?
Look, the bottom line is that because of the government shutdown, then the data became a little less reliable. It's also true that I think it's bad to look at the year-over-year number, because then what you're doing is you're averaging in the really highly inflationary months where Joe Biden was here printing money and causing inflation. And so the thing that we look at over at the National Economic Council is sort of a 3-month moving average of core inflation. And right now that's at 1.6%. Our estimate of like what the error bands could be around that that means that 1.6%, even if it turns out that there was some noise because of the government shutdown, you're still not going to get above 2. And so as far as we can tell, right now, core inflation is basically at or below the target. And John is a serious guy. He understands there's technical difficulties in the numbers because there are some things that they didn't survey. But if he gets his people to go back and tell him what the error bands are, then he's going to see that this is great news, just as my old friend Austin Goolsbee said. And this means that the Fed has plenty of room to cut.
Yeah, isn't that interesting? Austin Goolsbee, one of the 3 dissenters, and he did not want to ease rates a week ago Wednesday. Yeah. You know, President Trump spoke on Wednesday night, I believe, and he talked to the nation. Let me pick out a soundbite from what he said, and then I want to ask you a question about it regarding inflation.
Tonight, after 11 months, our border is secure. Inflation has stopped. Wages are up. Prices are down.
He said inflation has stopped. Kevin, we showed the numbers. Inflation has slowed, but it's still rising at a rate of 2.7%. Words matter.
I disagree with your 2.7, though. I think the 1.6 is the way to think about it, and I think that's the way the president's thinking about it, too. I think that inflation is at or below target, and it's when inflation is above target that the Fed then has an excuse to raise interest rates. And so I think by the inflation has stopped, what he means is that inflation has stopped being an excuse for the Fed to do the wrong thing.
President Biden got reamed. I mean, he was ripped constantly when he talked about how inflation had come down June of 2022 at 9%, came all the way down to just above 3%. And it was, well, it's still rising. See, that's the thing. You talk about how people feel versus the perception right now. And there was an article, it was a column written by Colby Hall on Mediaite, and it jumped out at me because the headline was that Trump's speech was an argument with observable reality. And his point was, he said it felt less of an effort to inform the nation than an attempt to argue voters out of their own experience.
No. That's completely false. And I got to tell you something that I found really exciting because it showed like the caliber of the journalism at Fox as opposed to everywhere else. The president thought that people might say things like what that fellow said. I don't know who he is, but he just said something that's not there very defensible. And so the president required us to make lots of charts that he put up while he talked about what was going on in the economy, so you could show exactly about the prices that people care about, exactly what's going on. And in all the left-wing media outlets, they wouldn't show the charts. Fox is the only network that showed the charts.
The sourcing, and the president's giving a
speech. The president's going to do the speech tonight, and he's going to show more charts tonight. And if people go and look, that everything that he's saying is documented. It's in the data, and prices for a lot of things are coming way down because of President Trump's efforts.
Just to be clear, Fox News did put up the charts and the data.
No, that's what I'm saying. Fox did, and nobody else did.
Well, they sourced it as White House. White House data, because there wasn't actual sourcing beyond just White House data. But let me say,
that was just a silly excuse, because if anybody wanted sources, they could say, what are the sources? And then we would have given them all the sources. And so if you festoon a chart with like footnotes all over the place, then it's hard for people to read. But if anybody had said, hey, show us the sources before we show you the charts, we'd have given them the sources right away. It's just a silly excuse. They didn't want the American people to see the success that Donald Trump's having. And I kind of find it really upsetting. I mean, come on, we gave them charts, and if they wanted to know the sources, we'd have given them the sources. And we just gave them nice, clean charts for people to look at during a presidential address, and they wouldn't let the American people see the truth. They wouldn't let the American people see the data, and that's what they've been trying to do forever. So I guess it's par for the course. But tonight, let's see what happens, because the president's giving a great address on his way back to Florida for Christmas, and he's going to have lots of charts again. Let's see
Kevin,
if anybody shows them.
We appreciate the compliment about Fox News and how we cover the news, but by the same token, you got to take the bad with the good as well. The Fox News poll shows that President Trump has a big disapproval rating when it comes to how he handles the economy. So, I mean, do you take that as well and say, good on you, Fox? I mean, our polls are very solid here, and they show 61% right now disapprove of how the president is performing on the economy.
Well, I can tell you that surveys about sentiment really, really tank when there's a government shutdown, and we saw that pattern over and over. But we got consumer sentiment today that was way up because people are starting to see that these policies are delivering. And so real incomes right now, after the CPI report we just got, are now up this year $1,300 for a typical American after dropping $3,000 over the entire Biden term. And so their wallets are thicker. Prices are going down, and they're going to, if history is any guide, then that's going to ultimately even affect the very imperfect surveys.
And you look at all the data, and the economy does look good. I don't think it's fair to say that it's a horrible economy. It absolutely is not, and therefore, why cut interest rates all the way down to what the president says they should be, and that would be 1%. That's it. And this comes to the question of, hey, you are talked about as one of the four front runners, only runners now, to be the Federal Reserve Chair once Jay Powell steps down in May. Where should interest rates be in the sort of at the end of the first half of next year?
Well, you heard my old friend Austin Goolsbee say something that I thought was really important for the independence of the Fed. He said, geez, I looked at these data, and these data show that I was wrong to oppose cutting rates. And in fact, I would support cutting rates a lot more now, given, especially if the inflation numbers stay like this. My expectation is the inflation numbers are going to stay like this. And it's not just because, I've got some economic theory about low inflation. It's because we're doing things just like we did in the first term. And in the first term, we had 3% growth, 1.5% inflation, and there was lots of room for the Fed to cut rates because we had really, really big positive supply shocks. And so my view is that the time that we're living in right now is like the time we had in the late 90s where the computer came in and made everything more productive and made it so you could have high growth and low inflation. And I think that AI is serving the same purpose, and that's really showing up in the data right now. But the thing I liked also about what Austin said is that the decision in the end has to be data dependent. And so if some random thing happened and prices started going way up again, something that nobody anticipates, then of course the Fed would have to change action. And so making a commitment right now to what the interest rate would be in June or July, it would be imprudent. It's inconsistent with the Fed's role to look at the data and be a neutral judge of what the right answer is.
All right, data dependent. Kevin, happy holidays. Thanks for
same to you. Merry
coming.
Christmas.
Thank you so much.